Well, good morning. It's September 30th, and here we are again. And listen, if you got a clip of us a little while ago, we're still learning how to move around and deal with all this. But today, I think we're going to get more information on how to run these cameras. They're so sophisticated, these cameras. But listen, I got the guys with me again. I've got Robert and I've got Andy here. Say hi to Robert and Andy.
What's going on, guys?
Good morning, everybody.
So today's topic that we're going to be talking about is we're going to be talking about the word stagflation. And I've got two of the greatest guys here that are going to explain stagflation to you as well. But those of you that don't understand stagflation, there's been a fierce debate right now about what led prices to accelerate at their fastest pace in decades. And with purchasing power getting lower and squeezing Americans' households. And that's what we're all feeling right now as prices keep going up, dollar gets lower. It's just taking any and everything that you've got just to barely make it by. Do you guys want to chime in on that?
Yeah, it is a complex subject. There are a lot of factors that go into it. But one of the things we know is that the government's been printing a lot of money. The government has printed half of all the currency in existence in the last 2 years. So you're flooding the economy with all of this liquidity, with all this paper currency, and at the same time, we had a long periods of time where the economy was shut down. People weren't productive. People were paid to sit home and get their stimulus checks from the government. So those I think are really important factors that we're still having to sort out. We're still having to hash those out. Rob, do you want to add to that?
Well, just so that the listeners understand, the definition of stagflation, and I'll read it to them, is persistent high inflation combined with high unemployment and stagnant demand in a country's economy.
Yeah, that's right. And, I'll tell you, Peter Navarro, who is an economist and a trader and was an advisor to President Trump when he was in the office, he says this is just the beginning.
Right.
And he said that the economic crisis is just the beginning, and it's going to be as bad or worse as long as it was during the 1970s. Wow. He says the dreaded toxic brew of high unemployment and high inflation plagued the U.S. economy for over a decade in the 1970s. And America's unemployment rate doubled to 9% between 1973 and 1975, while inflation peaked at around 14% in annual terms. And he said inflation didn't fall substantially until the early 1980s. And only after the Federal Reserve jacked up the interest rates. That's when Paul Volcker was the chairman of the Federal Reserve, and that's when they hiked the rates up to 20%. And that's what he's talking about, jacked up the interest rates to around 19%, leading the two back-to-back recessions in 1980 and 1981 and 82. And Navarro actually offered in this interview a look back on the Trump administration's economic policies, and he credited them with low unemployment and low inflation. And what we did, he says, was structural in nature, designed to increase the real wages of American workers, in other words, bring their wages up, and the productivity of American workers, the prosperity of the middle class, Navarro said. And that's one thing I gotta give kudos to Trump, was he was looking out for the middle class, right? And he was looking out for Make America Great Again, and he was looking out for as far as like bringing production back into the United States. That's why he put all those trades on China and everything, right? Because he knew that they were sucking all this money out of us all the time. And now those trade embargo, those things are still on, even though this new administration is in, those trades are still going on right now. But as far as like being made in USA instead of opening up your thing and seeing made in China. And that's the one thing that, President Trump was talking about. But he goes on, Navarro goes on and he says, and we did that beautifully. Well, that sounds like something Trump would have said. But we did that beautifully through structural elements, not just the traditional Republican tax cuts and the lower regulatory burdens, but by securing the southern border, which prevents a flood of uneducated, low-income workers coming in, he said. And that's what we have to look at. I mean, look at all of these migrants that are coming across the border, don't even know how to speak English or anything, a lot of them. And, are they going to be taking middle-class people's jobs? That's a question. What are you guys' views on that?
Well, you have to look at the industry. Where are some of these migrants and uneducated and unexperienced individuals seeking work at, right? Is it construction, landscaping? Is it retail services, right? Grocery chains? Where are their jobs being created? Where are their jobs being eliminated? How high inflation is becoming compared to how much productivity throughout the workforce is being created?
Yeah, that's what Navarro says. He says that Trump's policies on reshoring manufacturing and bringing supply chains back to the United States helped boost the wages for blue-collar Americans. And The Economist, he also argued that bringing back these Trump-era policies is key to pulling the country out of stagflation. And he says, I think the only one who fully understands how to get out of that is Donald Trump, is what Navarro said. And he said, I don't see anybody else in the Republican Party who has that kind of sophistication. And he takes on this trajectory of the U.S. economy, dovetails with remarks made by other economists who see darkening clouds on the horizon. And there's another guy, an economist, his name is Nouriel Roubani. You ever heard of him, you guys?
Sure.
Okay. So Nouriel Roubani, for example, who has been dubbed the Doom, Dr. Doom, that's Dr. Doom, for his pessimistic yet accurate prediction of a financial market meltdown in 2007 and 2008. Just remember, people don't like to hear the truth. They don't like to hear the truth, right?
But you'll hear it here.
That's one thing that Rush Limbaugh always told. I love that guy. He's up in heaven with our Father now. But Rush Limbaugh, you may not like what he said, but he told you the truth. He literally told the truth.
And he was very funny and entertaining.
Oh, yeah, he was funny. He was also really funny. Well, listen, Nouriel tells Bloomberg, he said in this recent interview, that he expects a real hard landing for the U.S. economy. And he also said that he continues to believe that it's delusional for analysis to expect a short and shallow recession, arguing instead that it will be long and severe. And in an op-ed for the Project Syndicate, he also warned of a looming stagflationary debt crisis with some of the worst elements of both the 1970s and the 2008 crash, as the public debt levels have become unsustainable and most of the physical ammunition is already used. So they've used a lot of this stuff that they've tried to bring it down, and what he's talking about is it's just going to get worse. And that's what I'm talking about when I say, look, they're just letting a monster loose is what they've really done. And they can't do, when you're fighting inflation, you guys, I don't know if you know this, you can't do what Paul Volcker did and raise the interest rates to 20%.
That's the key difference between now and the 1970s. That we can't raise interest rates like that or the country will go bankrupt because of all the debt.
Well, what's happening right now? I mean, look at again, market opened up in the up in the red again today. How it's going to end up with the end of the day, we don't know. Nobody has a crystal ball, but you can see what's going on. I mean, I watched last night over the, I don't know what they're doing with this repo and reverse repo money, but, it looks to me like they trying to drive the index futures up through the night, because they're taking this money and putting it in all these different exchanges. I don't know. But, the bottom line is, at the end of the day, it looks like it's always down, just like yesterday. It was a bad day in the markets again, right? We even were down in the 28s yesterday. Now we're back into the 29s, so it's very volatile. And when you have a volatile market like this, signs are telling you to be very, very careful. And let me tell you what else this guy says. He says things will get much worse before they get better. And he predicted in this op-ed, adding that he believes that the economic downturn will come alongside financial market turmoil. And billionaire, this was something, you guys heard of Stephen Druckenmiller?
Yeah, of course.
Okay, he's all over the news right now. He said at a recent investor summit in New York City that he's worried that the economic downturn affecting the United States could be worse than an average garden variety recession. And at the same time, investor pessimism has hit levels not seen since the financial crisis of 2008 and 2009. Listen, we know what happened to us in 2008, 2009. And all these economists, all these analysts, bankers, every traders, all of us, they're all pointing toward what happened to 2008 and 2009. And let me tell you something, wouldn't be pointing to it if it wasn't looking pretty much the similar way. The only problem with this 2008 and 2009, things are a lot different than they were years ago like that. The economy has come back up. Now the economy has gone back down. And even Trump said when he left office, he said, you're going to lose your 401ks and you're going to lose a lot of your money in your IRAs. Well, let me tell you something. Since he has been gone and this Biden administration is in now, there's been almost over $8 trillion lost, trillion with a T, lost in the stock markets from people in their retirement accounts. And those of you that can't even move a 401k because that's just the way the rules are, you can't do it till you're 59 and a half years old. Well, guess what? You're going to have to suffer just like they did in 2008, 2009. And in fact, I talk to a lot of my clients nowadays, and they're like, oh, I just now started getting back, making money again in my retirement account. Here it goes again, taking or sucking it right back out. Well, that's how these things work. You guys got any input on that?
No, just to piggyback off some of your conversations with your clients, I've been having the same conversations. It seems like I've been, speaking with and communicating with individuals who are just not qualified because of their age restriction, right? And a lot of these individuals I'm speaking with, they're 50, 54, 58. And a lot of these 401ks they've set up for themselves, they've been making contributions and having those contributions match for roughly 20, 30 years. Right? And they can't protect or even think about moving their money or making changes to their account because they're unqualified according to IRS guidelines to actually.
What do you mean they're unqualified?
Well, number one, it's a current employer 401k. And according to the IRS guidelines, being that it's a current employer 401k sponsored plan, they have to be 59 and a half or retired.
That's what I was touching on. Okay, gotcha. Yeah. So once they're 59 and a half years old, then they can go ahead and they can actually move it into another type of an account that would be a lot safer for them, right?
100%. They can make changes to that account. Or what I've also been seeing is a lot of the younger crowd and a lot of the older crowd as well having previous 401ks that are qualified to make changes to and actually protect their funds. I'm getting a little bit of both, but more so clients who really can't make changes to their account. They're pretty much stuck. It's a kill switch. They're trapped.
Are you saying they're stuck like in stocks and bonds, or what is that? What do you mean by that?
What I mean by that is that they're stuck in the sense that they have no options in protecting or safeguarding any of their principal that's in their retirement account.
Gotcha. Well, listen, let me share something with you. Stocks were choppy Friday as traders actually looked to close out a terrible week that brought the S&P 500 to a new 2022 low, and this is according to CNBC. And the S&P 500 was up 0.45%, and the Dow Jones Industrial Average gained 2.8 points or 0.1%, while the NASDAQ Composite was 0.93% higher. And an inflation report closely watched by the Federal Reserve released Friday that showed that the prices, here we go with stagflation, continue to increase at a rapid pace. So again, this is what we've been talking about. The dollar is getting weaker because prices are getting higher. So it's taking more of our dollars to buy goods right now, right?
That's correct.
And I saw today that the dollar is finally starting to lose a little bit of its footing. Gold prices started going back up again. Silver prices, platinum, palladium. I saw that today. The dollar against the euro was about 98 cents as far as the euro dollar. In other words, the dollar's worth 98 cents to like the euro being $1.03, something like that. So that now the dollar is actually down below the euro, just a couple pennies. But hey, that's a good sign. That's a good sign. We'll see how long it stays there. But listen, there's a federal vice chair, a woman. Her name is Lael Brainard. On Friday, she underscored the need to bring down inflation, saying that the central bank is committed to avoiding pulling back prematurely on restrictive monetary policy. What does that mean to you guys?
Well, like we've said, they're limited. They've used a lot of their bullets, and the Fed is limited in what they can do.
Well, she's saying that they can't pull back.
Well, they can only take it so far, because if they keep raising rates, the economy, we know, is going to go deeper into a recession. We know the higher the rates, then the higher will be our payments on our debt, which is not sustainable.
So do you think that they're going to keep raising these interest rates as well?
No, I don't.
You think they're going to go? They're going to stop?
As I said yesterday, when we start to see the effects of the higher interest rates on the economy, we see the real estate market now starting to capitulate.
Yeah, but what about where Lael Brainard is saying that they're committed to avoiding pulling back prematurely? So what is that?
I disagree. I disagree.
Yeah.
When okay, all of a sudden we start to see unemployment going through the roof. We start to see the real estate market crashing.
So how much do you think they'll keep? Do you think we'll see some more going up next month?
I think they're not going to do much more. That's my personal view.
All right, we'll have to wait and see.
Because the political fallout will be so bad. And let's face it, these guys are all political. They say the Fed's not politically. It's not a political factor. It's not part of politics, but of course it is. And just want to hold this up here to the camera. These are some beautiful Walking Liberty silver 1 ounce coins. And if you start to invest now in these real assets, you're going to be early to the party, because there's something we know in investing. It's called FOMO, fear of missing out.
That's a good one right there. FOMO.
FOMO.
That ain't the Fed's FOMO.
That's not, yeah. The fear of missing out. So when we see precious metal prices start to really go into a bull phase, which I think is coming in the next year to 18 months for sure, people are going to be desperate. People are going to be FOMOing in. You want to be early. You want to be ahead of the game when it's boring. Gold has been in a consolidation pattern now for about almost 2 years. Time to get in is when it's boring, and not when everything's falling apart. That's when you don't want to be in the FOMO position, jostling with everybody else and desperate and panicky. That's not a way to invest.
You know, let me tell you, stocks actually sold off on Thursday, yesterday. And they sold off with the Dow losing more than 1% and the S&P 500 and the NASDAQ composite each dropping more than 2%. And investors actually weighed concerns over future rate hiking decisions like you from the Fed and the impact on the market. And this is according to CNBC. And they're saying that those losses put the major averages on pace for sharp weekly losses, and that the S&P 500 is off 1% for the week, and the Dow is down 1.1%, and the NASDAQ is down 0.2%, 0.2% lower. And according to Jamie Cox, who's the managing partner of Harris Financial Group, he says that the market flat out stinks. He says,
He's
but
on
that,
there.
yeah.
Somebody's on.
He says, but that's basically what the Fed wants. They want to tighten financial conditions, and they believe that they will help bring down inflation to the levels that they find acceptable. And they're using the transmission mechanism of the market to make it happen. Pretty much what you just said. And he says, they go on, CNBC says, Friday also marked the last day of the month and the third quarter. And for September, the S&P 500 and the Dow are down more than 7% each through Thursday's close. And that would be the worst monthly performance for the Dow since March of 2020. And the biggest 1 month decline for the S&P 500 since June. And the Nasdaq is actually headed for the biggest monthly loss since April, losing 9.1%. So quarter to date, the S&P 500 and the Nasdaq are headed for the first 3 quarter losing streaks since 2009. Interesting. Losing 4% and 2.7% respectively. And the Dow is down 5.4% in the third quarter, and it's on pace to post a third straight losing quarter for the first time since 2015.
Wow. It's bad. It's bad.
So the Dow, in other words, they're saying, CNBC is saying, is having the worst September since 2002. And it's headed for its worst September since 2002. And so, in other words, this September is more appalling for the index than the same months during the financial crisis in 2008.
So it's worse.
It's worse. And the Dow is also seeing its worst month since March of 2020. Meanwhile, the S&P 500 and the Nasdaq Composite are having their worst September since 2008.
It kind of goes back to just if the Fed was going to fix it or do something about inflation, when things were transitory, right, quote unquote, don't you think they would have already done it? Like, if they were going to fix
Very good point.
their mess up, wouldn't they have already done it months, years ago, right? You follow what I'm saying?
Yeah.
Well, just to your point, they don't really know what they're doing. They said it was transitory. They said it was temporary. They said it wasn't even real. And now here we are with the worst inflation in 50 years. They don't know what they're doing.
Yeah.
That's what it comes down to. That's why people out there listening, you have the Fed, they don't know what they're doing. They do not know what they're doing. These are people who are out of control, you could probably assume everything they do is wrong. So you have to protect yourself. You have to take action.
Yeah. Getting away from the economy here just a bit. Greg Hunter. Greg Hunter is USA Watchdog. And Greg Hunter does this thing on Fridays, and I like to follow him on and see exactly what he has to say, because he talks to a lot of guests all during the week about the economy, about COVID, the vaccinations, about everything. And he opened up today and he said that President Trump is openly warning, and I know y'all seen this because it's in the news, right? They're not holding this back, but President Trump is openly warning about the possibility of a nuclear war with Russia over Ukraine. Now, keep in mind, folks, nobody seems to want to put a peace treaty together with Russia and the Ukraine, and it seems like nobody's talking about peace. They're all just talking about giving Ukraine more money to have more of a war, right? So
that's a good strategy. Give more and more money to the most corrupt government on the face of the earth.
And it's our money. It's our taxpayers' money that's funding this, right?
And it's all going to the old.
Netherlands has already said it's time to stop. We're not putting any more money. It looks like the United States. I don't know. I'm not a bookkeeper, but it just keeps on taking more and more taxpayers' money to fund this war. And I don't know about you, but I don't like war. I don't like anything about war.
Nobody likes war.
So Trump has offered to actually negotiate a peace deal. but no one is actually taking him up on the deal. And, instead, the U.S. Congress now has approved a fresh $12 billion to keep it all going. And Greg says that there are zero peace talks, and this is what I was just talking about, zero peace talks going on right now, and that Biden and NATO do not want them. Well, obvious. I mean, and they want war, and it's only a matter of time when the latest blowing up of the Nord Stream pipeline, with the latest blowing up, like the pipeline that just blew up, that carry natural gas from Russia to Germany.
Wait a minute, this can't be true. I thought conservatives are the only ones who love war. Liberals love peace. Liberals love tolerance.
I don't know. It looks like a war going on. I mean, there's people being drafted right now. I mean, in Russia, you've got the Russian guys like going across the border trying to get away. I heard tickets are like $25,000 on a plane to get out of there.
The globalists and the deep state, they have to demonize somebody, and that person is Putin. Before they demonized Trump, they have to have their demonizing enemy to distract you, to divert your attention from what's going on in the country, what's going on in the economy, what's going on at the Fed. It's a big distraction.
Yeah, I agree with you. Listen, he goes on, he says, Hurricane Ian has landed in southwest Florida, and it's caused major severe damage. And Governor Ron DeSantis said it brought a 500-year flood to some parts of the Sunshine State. And estimates are up to...
What does that mean? What's a 500-year flood?
In other words, it's like over 500 years ago. There hasn't been a flood like that since 500 years ago. And estimates are up to $40 billion in damages that were caused by the hurricane.
Wow.
That's just as of now. And that the mayor of Fort Myers Beach... Have you ever been to Fort Myers?
No.
Oh, beautiful place.
Really?
Yeah.
Not anymore.
Fort Myers, no, says that the city is now 90% gone and there is nothing to come home to. It's gone.
That's amazing. Unbelievable.
Nothing to come home to. Fort Myers, beautiful place. Really, really beautiful place right there. And everything that's happening, there's so much. It's just like it just continues going on and on and on. And I know I quote a lot of things that I see, but a lot of this doesn't get out to the general public because they just want to keep talking about war. They don't want to talk about the things that affect a lot of us, right? Like this Hurricane Ian, before long, now that one will be swept under, I think, and then it'll be gone into South Carolina. But seriously, I mean, it's good that we've got somebody like DeSantis as a governor that knows how to prepare, because he was all prepared for all of this from what I'm understanding. But, these are reasons why, you want to have yourself in your house in order, so that when things like this happen, whether it's a nuclear war, whether it's liquidity problems, whether it's stagflation, whether it's inflation, whether it's being misplaced, whatever, these are the reasons that you want to have metals, precious metals. I can't say it enough. It's been around for eons. It hedges against inflation. It's not a get-rich-quick scheme, but it is a way for you to protect what it is that you're looking to protect. And that's why we've got thousands of clients out there, and that's what they do. They call us. They give us a call at 800-753-8534. Again, 800-753-8534 or 323-842-72. 323-380-5485. I almost gave you my cell number. 323-380-5485. But folks, listen, I don't know what you guys want to say, but all I can tell you is, be prepared. It's like being prepared for a hurricane. You battle down the hatches, right? You board up the windows. You do all of these sort of things. So why wouldn't you want to do that with your investments? Board them up, protect them. What do you guys got to put in on that?
It's honestly a choice between having control and not having any control. That's really what it comes down to. If you want more control over your retirement savings or your investments, put a little bit, allocate accordingly into physical assets: gold, silver, platinum, palladium.
Yeah, I agree. Well, listen, it's been great talking to y'all. Have a great weekend. I know I'm going to have a great weekend. I'm going to the horse races. So God bless you all. We'll see you Monday. And like I said, we're getting better at this and we will get better at this. So take care and see y'all Monday.